The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, and it's my pleasure to be here. These are certainly large shoes to be filled. It's very tough to do. Larry's an outstanding technician, so we'll do our best here. Meantime, back at the ranch, we do have the Dow up 14 points at 16,549. S&P's up about a point at 1879. The NASDAQ, and this is going to be very interesting because what we've got here, I was just looking at the NDX a few moments ago, but we'll go to the comp index. The comp index is up. No, it's down 9 points at 40.94. Now let's go to the NDX, NDX.X. The NDX is down just 2.86 at 3571. What's really important about what's going on right now is there's an underperformance and not an overperformance, but a leading performance. The IWM is looking just terrible. It's at 110.71. That's the iShares, the Russell ETF. But have a look at this. This is the ESM14. That's the way I get the futures, the E-mini S&P. What I love about this chart is the steadiness of the moves to the upside, how it's walked the 9-period moving average. That's the technique that I like to use. Now, Larry, of course, doesn't use any of these moving averages. He has his own technique, and he uses the butterfly and Gartley, etc. But most importantly, there's no denying that the pattern that we're looking at here with that trend line that has just been taken out, that's going to be very important. So now we've got 2 hours to go. We'll hear from the Fed. The Fed, I'm convinced about this, that the Fed usually does not, or any major economic announcement, unless it is just absolutely horrible or magnificent, doesn't change a trend. And right now, the major trend is still up, even though the daily charts had a sell signal to the downside. Now, this is part of what Larry does, so I'll talk about it. You see that move from 1892.50 on April the 4th, straight down in 2 bars, down to the 1830.75 level on April the 8th? So that is, in Larry's terms, and certainly in others here at TFNN, it is the A to a B of a move that looks like a lightning rod. And then that bounced up to 1867 on the 10th of April, in 2 days again, and then it reversed. Said, you've got 2 days to come down. Now, this is a technique that I've developed, I've been working on for quite some time, a couple of years, in fact, that I call, it is the one-to-one gives you a move from the bottom to the top in a price movement. But if you're moving diagonally, then sometimes you can eventually get there, but in a very jagged way. What I do is I like to use time as well as price. And in this particular instance, look at the perfection of the time down from the A to B and then the C to D. Remember, this is not the Chapman wave methodology. This is something very different. And this took you to a trough B in the Chapman wave, a lowercase b, right there. And that 1803.25, almost within 2 points, it was so magnificent, saw a rally in one. That bar itself that made the low was the bar that turned around sharply for a beautiful green candle, another green candle, another green candle, a smaller green candle, an even smaller green candle, slightly bigger, and then a doji candle. The doji candle happened to correspond the following day to an exact inch. You don't find exact inches in the Dow. I think the last one was in December the 24th, 2001. So it's very rare to do an exact, 0.00. Well, that's it to me, that if the following day was down sharply, and that's where you see the futures gap down, if the Dow went down minus 40 to 60 points very quickly, it will continue in the direction for a pretty sharp move. That's exactly what it did. But that formed a trend line support in the E-mini. That E-mini is now looking as if it's because it's broken out into the 1875-75 area. It's above that resistance line, but the day is young. If you're looking at a daily candle, don't extrapolate your inner emotions or whatever it is until the day is finished. In fact, I like to say you have to wait for the next day to get confirmation. We could find that this beautiful candle in 2 hours, in fact, in exactly 2 hours at 10 past 2, or let's say a little over that, is trading at the bottom. Well, what decision you've made during the day has suddenly changed diametrically to what you were thinking before. So remember, at this particular time, it's looking good, but the day is young. Now, when I look at the 120-minute chart of the E-mini, these are the futures. This is the futures hour. What do we see? We see that that rectangle has tested the low of 1866. It went to 1866.50 at noon. Noon? This is, I remember this looks at the end of the bar time-wise. And now it's starting a new move, and it's going halfway into the wick of the candle, this last candle in the 120-minute chart. And it says, if I'm able to break 1875.75, that is very positive action, especially if it's by the end of the day. If, on the other hand, I start to slide and I break under 1870 in the 120-minute chart, I've given up the gains. I'm stuck in the rectangle formation. I try to make it as simple and easy as you can. So I'm going to go through a bunch of things here. I want you to just look at futures hour. I want to look at copper. And then I got a couple of questions I didn't get to from my hour just a short while ago. So this is not good. Let me see if I've got better information on the... Yeah, my continuous contract for copper says that we've made a peak E, almost certainly a peak E with a doji high at yesterday, 2 days ago. Lousy candle yesterday, a horrible candle today. If you're looking at the, I'm using the continuous contract. I just find that for copper, I seem to get a really nice reading with the continuous contract. They're very close together. And what I'm looking at here is peak A, peak B, peak C. Yep, that's a C. And then it goes to a D. And then it pulls back, holds the 9-period moving average, doesn't break down, but it goes to an E. That's where, because the MACD and stochastic were negative and the price did go under the 9 EMA, I have no choice but to put a down arrow. However, it's still extended higher, and that went to a peak F in the Chapman wave, and now I have to put an inverted V. That's how I notate and visually explain exactly what's going on. Yes, that was a sell signal. This is what I call a right arm extension, where one of the technicals, in this case the stochastic, just had enough strength to push it to a new high, but the MACD was fading and deflected lower, and it started to pull back. So copper in the 120-minute chart is at B, right there, B, C, D, and now it's at E, just below the 200-period moving average, and it's ready for a little bit of a bounce. If I had to do a left side, right side price time match to the most important trough, that's right there. And I go from that bar, I go all the way to the peak F top right there. And I look at the plumb line. Remember, it's the most important thing that you can do in this particular technique. How and where you choose to use your plumb line is very important. And the plumb line is the vertical line that says there's a chance that you can make an equal move to the downside. Now, I just need you to show this to explain something. When you're looking at a move like this, you've got to say to yourself, wow, you went up so quickly, and then you came down very gently, except for the last, that ugly candle, 120-minute candle of the last 120-minute candle. So when people say, oh, you go down way quicker than you go up, I can show you not 10 or 100, I can show you thousands of charts where you've gone up in the same kind of steady move to the upside, and you've come down in the same steady move to the upside in a left side, right side price time match. Now, that is different to when you're in crash mode. If you're in crash mode, you absolutely take out the last 30 bars on the left right down. But every other thing, when you just go up normally and come down normally, everything should be equivalent. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. I'm excited to see you're back in Staples.
Oh,
I stayed in
okay.
for a while.
I hope I'm excited to be back. But so far, it's doing nicely. Yeah.
Okay, but my question is the Shanghai index. It looks like if I put it on a weekly over the last 2-3 years, it looks like over the last probably since December, maybe January, it's made a little bit of an M pattern.
Correct.
I'm wondering if you think it's going to break.
It's actually done it in all time frames, whether it's the monthly, the weekly, and even the daily. Yep. So your question is?
I'm looking to maybe go long this at some point, but I'm wondering if you could give me a better idea of what your thoughts are.
Okay, so this is what I'm looking at. In the daily, it's made a peak D. Folks, I'm looking at, actually, I should clarify. I'm not looking at the Shanghai. I'm looking at the Dow Jones equivalent of the Shanghai. So what it's done is I'm sure that it has different numbers. Maybe it's off by a zero. But what is your price of the Shanghai right now?
It's like 2026 or something like that.
Okay, I've got 264.50. I thought it was maybe a 10 for 1, but I'm not sure what it is. But the pattern I know is very, very close. So what we're looking at, folks, is the lower that was made in March. Probably, what is it, the 12th or something? Let me have a look at the date. The low that was made on the 12th of March at, I'll give you my number, 257.63, went up in 4 successively higher peaks. It came down, and in this case, it did come down quicker than it went up, but now it's stalled, so it hasn't gone to the left side low bar of the 12th, and it's trying to bounce. The MACD is at 7%, it's okay, and MACD is still expanding, and the stochastic at 7% is okay, but no, I should say it's very weak. I should not say it's okay. It's the equivalent that if it was at 93%, I'd say, wow, that is very strong. So this is the opposite of very strong. It's very weak. So it made a lower low in the weekly. So then this is an A. That was an A minus. There's the M pattern. Oh, this is an example of peak C1, peak C2, and peak C3. Each one just a little bit lower. And it, in total, makes up a sell signal, and that was right at the 200-period moving average. So how would you, is this a general question, or would you be trading it?
I want to trade it the way of the FXI or the yin, YINN, which is...
Right. Okay, that was my question, because I have the FXI, and I can do a lot of work on that because it's already notated. I'll be right back with Mark in Fort Collins and Brent in Martinez, California, straight after this break, folks. And the Dow is up 17 S&Ps of 1.5.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and we're on with Market Fort Collins. We're looking at basically the China Large Cap ETF, the FXI. What I'm looking at here is I'm trying to find signs of strength. That is sustainable strength, and what I see is that the arch pattern continually fails and comes back down towards the this is C to D. That also made a D. So the first sign of strength that I'm looking at here is the move yesterday that attempted to push higher, which is negated today by a move down 25 cents at 34.82. You know what I'm going to suggest? I was also asked about the EEM. If I compare the two chart formations, while in a sense they're kind of similar because they've both had rallies that have failed, the EEM is overall at a higher level and is attempting a better, which is the emerging market index. I just want to put, I like to either compare or to try to get a comparison with something that is in the same area, but maybe a different sector within the area. So this is the foreign markets. And if you look at the FXI, I'm just going to show this for anyone looking at Tiger TV. This chart that's about to change, that is the daily chart of the EEM going to the FXI. And you can see this is making lower lows and lower highs. If you look at the EEM, yes, it was making an arch formation, and it did make lower highs and lower lows, but it's way above the 200-period moving average. And in fact, 40.60 low of the 15th of April went to 40.54. So that's 40.60. Yeah, just 6 cents lower. And so, in a sense, it's showing better relative strength. Now, the very big question here is, and I would say I'd wait for the end of the day. If our market is going to move higher, then there's a really good chance that it'll probably lift to a certain extent some of the others. Now, if you're asking me, Mark, is this something like a buy and a hold because it's made a peak C? Whoops. FXI, because it's made, a peak A in the weekly chart, and there's a chance that it's going to go retest the 37.19 200-period exponential moving average. I would say only if we have most things moving together. I'm not sure at this particular time if I want to go into the FXI just because it's acting a little better. A little better to me is not good enough because I want to see, I'll tell you right now, if the FXI on a weekly basis takes out 33.90, it's a 34.80. So if it closes a point lower, that's just very negative. If, in fact, by Tuesday of next week, it's turned around and is trading over last week's high of 35.69, then I'm going to say to you, now you've got a trade that has a chance to go to the 200-period moving average of 37.19, and all you need to do is make a fairly tight stop, because if it's going to do that, the history of this is that once it's moving up, it moves up quite quickly, and it continues moving. If it suddenly stalls, that's the pattern that says, whoops, be careful. So that's the only way I would do it. But to tell you the honest truth, if you ask me, would I be buying it? I'd just say to you, I think they're just better deals out here. I don't see any trigger for it technically at all for a push higher unless I see it close above this week's high, but definitely last week's high of 35.69. Hope that helps you.
Yes, thank you.
Thank you very much for calling. Let's go to Brent and Martinez. Hi, Brent. How are you?
I'm doing well. I'm going to have to call you Basil Pesavento from now on.
Oh, okay. I don't mind. It's a compliment. Thank you.
Thanks for doing double duty.
My pleasure.
I wanted to have you, again, if you could, look at either the SCO or oil, please.
Okay, so are you long the SCO? I think you were when we last spoke.
I am still, yes.
Yes, okay. So there's nothing to discuss. This is in leg C. Crude oil looks like it's made a pretty, it might be a significant top, but at least a serious short-term top here. I did work last night, and I went through some charts that I'd actually forgotten about, just by coincidence. I went through the OIH, but I also looked at the OSX and the USO, and if I had written it down, in fact, to start to short them. But in fact, once crude oil opened down sharply, I thought, okay, it's too late to go into something like the SCO because it's already going to gap up. But if you're looking at crude oil, the daily made a peak D with a long wick doji, which always gets tested in the middle of the candle, and that's exactly what it did. I think that crude oil is going to test, right now it's trading at 99.53, and it's going to test the 98.15 low, doji low of the 2nd of April. If it breaks that, 97.11 will be the next level. So hold on, because what I want you to do with you is I want you to show you a couple of comparisons about the oil service sector as well. So I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and what we're looking at here is I want you to just show Brent a couple of quick things here. So first of all, Brent, stay in your position. It's a great position. I don't really want to mess with it. It should go to a D. It could have a little bit of a pullback, but it should go higher. But when I'm looking at this, and this is fascinating, look, the oil service, the Market Vectors Oil Service ETF, the OIH, made a peak E-top, but it's making a high-level consolidation. It took me years to actually get it into my head that you've got to separate oil from the oil service guys. They each particular instance, oil service is still holding nicely. I'm watching it real closely. I've got leg C in the weekly chart of 52.76. And this week, the high is 52.72. So if by Friday afternoon it hasn't broken out, then maybe next week we get our D, which will correspond to leg F, I believe, in the monthly chart as it tries to retest the old in a triple top area of the 50, 55-ish area where it was back in 2011. So I just wanted to say I'm trying to separate those things out. And you've got yourself a really nice position. If I look at the USO made a peak D, was it? Yeah, peak D top, beautiful top, gap down, made an I. Actually, this is it has two gaps now, and it looks to me like it's at 36.20. There's a good chance it'll test the 35.69 200-period exponential moving average. And then we've got to be careful. There could be a bounce, but so far it looks like it's pulling back. So, hey, congratulations.
Could you, is there some way to determine if we were to get to the 98.15, how that would correspond to the SCO, its price?
How it would correspond? Yes, I could. So this is going. So 98. Give me a second here. SCO. I tell you what I'm looking at on the SCO independently. Of course, they're related. The very big thing is that doji candle with the high of 30. You'd love to hear this. 30.02 that was made on the 2nd of April. Somewhere in between there and the high that was made at 31.27 on the 17th. That would be the area for me. If it starts to hold in that area, then crude oil could go even deeper, and you would see 31.59, the 200-period moving average. I'm just going to go step by step. I think the candle that we're looking at here is between the high of 29.75 of the 3rd and the doji candle of 30.02. So it's very easy for me to say, if crude oil keeps going, I could just name you a price. I'd rather go step by step, because going step by step means you've got a goal, a target. If it meets that target, then you can start looking at higher prices. If it doesn't get there, why would I even want to look at higher prices? I'm busy looking to see where would the support be. So let's go one step at a time. It's gapped up to C. The stochastic is good, not great, but it's good. MACD is improving a lot, and the histogram is positive. I think the SCO, which is the ProShares Ultra Short AIG crude contract, 200% short, I believe. Yep. And I think that's acting very well right now for you. So that's the way I would do it. Hope that helps you.
Oh, very much so, Basil. It helps to. I agree with what you're saying. That's how I try to do it. Just take a step at a time, and as it reaches these different points, then just assess it as that happens. So
yeah, because that way you don't have you have unrealistic goals. If you talk about something trading at 3, and if it works, it's going to go to 17. I don't care if it goes to 17. I'm worried about if it goes to 2.
Exactly.
Well, anyway, thanks for calling. I appreciate that. But congratulations. Fabulous trade you've got there. So, and I have to congratulate anyone who's being a short crude. Congratulations. That's a great move. I saw it. I didn't do it. I was just slow. I did see it, but I was slow. Now, here's a couple of questions that I want to deal with. I'd like to get to these because they go back even from yesterday. They're still relevant. So the VIX. Judy says the VIX looks like it's always being sold off. Yes, that's the nature of these darn things. If you look at the VIX index, it's not going to tell you much. But if you look at I shouldn't say that. What I meant is it'll tell you a lot because it's trading at 13.69. It's failing. If at any point this afternoon or tomorrow it bounces from 1369 to 1420, you will see this market take a hit. But if it stays down here, that's buying pressure. But if you're looking at something like the VXX, which is the iPath S&P 500 VIX short term, it just shrinks every time there's disappointment in this, the premium just comes right out and it pulls back. So absolutely, it's a very disappointing thing. You buy it as insurance. You don't buy it to look at it every day. You buy it to say, great, we've had 3 days where the market has closed at its lows. I bet my VIX is now way higher than I ever bought it at. And that's really the way you have to look at it. And it's just insurance. So I've been stressing that it's insurance. I own a little bit here. For me, it's family insurance. I don't mind. That's just the way it is. And I'm prepared to see it go down. I know that at some point, if you hold it long enough, it's going to do very well. But the point here is it's just insurance. On to that question. Bob asks, Dow, where is this rally on your chart model in the middle of the move? Well, let me just do this. It's a very good question. Where is it in the model? I'm pretty sure what Bob is talking about, not the daily, which is in leg C, and is still under the previous high, so I have to think that it could fail at any point. I have to just tell you that if the Dow goes above 16,631, my weekly chart, I just don't know what I can do. I have to call it leg C, and that's very bullish. And if it doesn't say that it's I should be very careful. When I say very bullish, it means that there should still be a leg D to the upside in the weekly chart. It's not saying the Dow's going from 16,553 to 26,000. What it's saying is it's in a bullish mode, confirmation. And it could pull back sharply, but it should still go higher in May. That's really what it's saying. All right? And that's the same with the S&P. If the S&P goes above 1897, what was it? 1897.28. I have to call that leg C. If the New York Stock Exchange goes above NYA, and it's seldom that you have so many charts that are so close to all-time highs that refuse to go to all-time highs. So it's that in this particular instance, it really will be terrible news that just knocks us for a loop. Who knows what it is, but that's what it will be. The New York Stock Exchange goes above 10,669. It's trading at 10,599 right now. So that's 100 points. If it goes above 100 points, 70 points, if it goes above that, that's going to be leg B, and there's your up channel that we'll be starting to test. So failure is going to be very important, right? So I want you to get to that. So that's your answer. So my answer right now, those are the parameters I'm watching. And if you're looking, if the big question that Bob asks is, where is it in my model that I'm saying, I've got this in leg E in the monthly chart. There should be a pullback, a pretty decent pullback sometime. It could be May. I'm thinking May sometime. Maybe it's even June. I don't know. But there should be a pullback. It's the next move up that I think starts the big acceleration. And I would love to see it after the summer. I'd love to have a summer just in the doldrums, getting ready for something like that. But if we break out now, I think that this will start to accelerate. That's what I'm thinking. So I don't want to confuse you. If we break out by going to the 16,900s, 17,000 in the next month or two, that you cannot deny that is a breakout of major proportion, and you'll start to see those momentum stocks get back to being momentum stocks. So I don't actually expect that. The pattern that I'm looking at in the daily chart says this U-shaped pattern can continue for another U-shaped pattern. That would correspond to a weekly peak C and then a weekly peak D. And it says you don't go all that much higher. It says the 16,700s to the 16,800s, probably going to be, if it breaks out, that would be a big test of strength and resistance coming up. So that's that question. Let's see. Next question is Sarah asks, EEM, wave count, emerging markets ETF. NDX broke through the 9 EMA and recovered above. Is this a sign of strength? I just did the NDX, so let's just go to the EEM again. EEM I discussed earlier with Mark and Fort Collins when we were looking at the FXI. So there's a sell signal that went to a sell mode in the EEM, which is the emerging market ETF, iShares, and 42.47. Then it makes the H pattern, right, like that, and that fails and goes to a lower low. But then it bounces. But it's starting to make another little mini H pattern, which makes the 40.57 area to 40.40 really important support. Because if it starts to take that out, it's messed up the weekly chart, which was at a peak C, trying to find support of the 9-period moving average so that it could move higher. The MACD is pretty good. Histogram's good. The stochastic's at 83%. When I look at this chart, I try to be as objective as possible. I have to immediately draw in a cup formation like this and say, that's the cup formation that I'm looking at. I can give you a little bit more time, but not much more price. And if the EM starts to take out 40, starts to trade in the 39s, that's saying, uh-oh, not a good thing. That's like a failure mode. And if you look at the monthly chart, and this is even more important, the monthly chart, just like doesn't this look familiar? If I go, I won't tell you what I'm doing, but if I go like this, watch closely, here's the monthly chart. That's the breakout that you like. You see, that's the euro-dollar currency pair. In leg E, probably by the end of the day, it's going to be a peak E. But there's a chance that it's making an instant restart. I'm saying a chance. Why? Because E will become very negative if the euro suddenly breaks down over this low here. If the euro, which is trading at 1.38, suddenly starts to go to 1.34 in May, that's going to say, uh-oh, be careful. You're starting to fail. You're getting back into that inside track resistance area, not good, unless it just needs time to recoup to be able to power higher. But in the meantime, it's just a nice move to the upside, very casual walk in the park. It reminds me of Barcelona. Anybody been to Barcelona? Yeah, everybody goes for that afternoon stroll. You got grandparents, children, and grandchildren all walking along, dressed so nicely in the plaza along the. I can't remember the name. It was so long ago that I was there. But anyway, yeah, it's like a walk in the park, walk in Central Park. Let's just be local. Walk in Central Park, and but here's the weekly chart that says if, on the other hand, the euro breaks upside and takes out the high of the week of 11th of April, 1.390, all of a sudden you're looking at a potential to retest that previous high from back in March, the week of March the 14th of 3.96. So these are the breakdown levels. Now let's go back to what we were talking about. So that's the EM. What do I see? Would I be buying the EM here? You know, I see so many other things that are just nicer chart patterns. I just don't think it's a chart pattern I want to buy. Yet, at the same time, I'm going to show you one particular pattern in the Chapman Wave master classes that we do. I always discuss this pattern. It is the H that turns into a successful H and then starts to rally, and that rally takes out the previous arch high, says it could retest the top of the, in this case, 42.47. But today's candle is not great. So by tomorrow, by Monday, you need to be above 41.57. So answer, Sarah, would I be actually buying the EM? I see better chart patterns right now. I'd probably buy it if it showed strength and it went to 41.50. If it closed above 41.60, I say, hey, you know what? Now's a good time to buy it. You know exactly. You can put in the tightest of stops because it should move higher to test the 42.47 level. And then what happens? All of a sudden, it can go to leg D in the weekly. There, I think I'll answer that one thoroughly. So next question was, how low rates are giving M&A and stock buybacks Momo? Is 2014 going to turn into 2013 part 2? 2000 you know, that's a question that I would be, to tell you the truth, how can I answer that? Low rates. I tell you what I'm going to do. Let me talk about low rates, because low rates, we've had low rates for so long that it shouldn't be, in fact, a bias towards buying many things. And it has been to a certain extent. I'm just going to tell you that if I'm looking at my triple yields chart, the Public Gardens was a good one as well for a walk in the park. Thank you. The 30-year T-bond yield is the white line. The yellow or gold is the 10-year note. And the 5-year T-note is the FVX, and that's cyan. Now look at this. I spoke about it the other day. I said there's a divergence. The 30-year has gone down to a leg E, and right now I'm looking at a potential for a trough E if 34.18 is not taken out this week. That's number one. But look, you've got almost an oval pattern in the 10-year. It's just been very steady at 26.60, 2.66%. And it says a break below 25.79, you get your leg B, and because of the cluster pattern, you could in fact get a propeller shaft from here down to the bottom. I don't see that happening right now. Most importantly, look at the 5-year. Keeping testing the highs. This is a divergence I don't remember seeing before. Maybe I'll talk about it a little bit more when we get back. Basil Chapman sitting in for Larry Preservento. Dow's up 20, S&P's up 2. That'll all change in the next hour as people get a little nervous. And I'll be talking.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, don't forget Daryl's show coming up. It is really just a fabulous, it's another way of looking at trading, position playing, doing trades that are based on a viable, very robust system and using your own techniques. You just have to learn the formulas, and the way he explains is really terrific. So please stay tuned. Diagnostic Trading Hour. And, of course, this is called Trade What You See. I thought it was Thursday for a minute. I will be here tomorrow for Larry's show. So the question I had about the interest rates, let me just go back to that. We are where we were in the 30-year back in 2011. I could even squeeze this chart, and you'll see exactly what's going on. We've been here so many times. We've been there back in 2009. But it's what's happened since then that's very important. People are getting a little immune to low interest rates. It doesn't make a big deal anymore. But, in fact, it should be making some kind of a deal. It's very important. If rates, people never lived through those rates at 18%, for 16 or 18% back in the 70s and early 80s. So now look at this. The arch formation is starting to find some kind of a base that was previous tops. So that's why it's really important. The whole 34% area, 3.4% area, a break below says that the 30-year could go to leg D. If it's next week, if it's this week, it's then C. So I'm looking at this and I'm saying, okay, no big deal right now. But what is a big deal is the divergence between the 5-year, which is holding very well. It's kind of in a rising formation, The 10-year is just going sideways so far, and the 30-year is coming down. So that's all I can say is that there's a divergence. There are terms for it in the economic world, but I'm watching it real closely. Now, I had a quick question about, not a quick question, but a question about T-Mobile US. You know, I hear a lot about when I'm in the mall, I see T-Mobile. They always seem to be busy. I don't know how much they do. So the question is this something to be buying? Well, I'm going to make the suggestion because of the question and because you've done a little research in it. I'm going to suggest that you nibble on it here at 29.17. Technically, the monthly it's a leg A and then a peak A, and it's held above the 90 EMA. That's really not the issue. The issue is that it's held the 200-period moving average in the daily, and the weekly has made a rectangle formation, and it should be closer to the bottom. That's why I'm saying to start a little position at 29.16. Let's give it 3 days. If in 3 days' time it hasn't closed under 28.23, but instead it's gone above 29, it's at 29.16. It's gone above 29.80. No, that's too far. 29.43, it's gone to 29.55. If it goes to 29.55, that's the kind of action you want. Steady, step by step. You want to make this doji candle possible today. A 1-to-1 move to a halfway marker so that it can push towards the 29.80 to the 29.30 level, and just go step by step, because this is the early stages of the life of this particular stock. So, in PE, LL, I've typed it in, it's all there, right there, 1222.05. Question was, LL looks terrible, and if you're still short, I think you were short, I'm thinking that it could test, the 120-minute chart says it's within, I think I said about 6 to 8 120-minute bars of trying to form some kind of a base. If you've been short, I'd cover a little bit, but I wouldn't be buying it right now. So that's LL Lumber Liquidators. Unbelievable move it to the upside, and now with the housing slowing down a little bit, it too is slowing down with A to B equals C to D possible in the monthly. I think it will be going lower, so I would say cover a little bit and see what happens. So yeah. So this is it. Before we wrap up, don't forget my service is the opening call. A very comprehensive daily look at the markets. What I'm doing here live, talking about it, I try to put that in notation in my newsletter. We have a couple of stocks. We bought a couple of stocks in the last couple of days. They seem to be doing okay, but hey, yellow could come on in an hour. Everything could change. Meantime, back at the ranch. I'll see you tomorrow, and have a wonderful day, and I'll be back for my show tomorrow, and I'll be doing Larry's. So thank you for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.